Hello, dear friends. Today is Friday, November 22, and it's time to take a look at the charts for the euro and the British pound to make some predictions. The euro continued its downward movement yesterday, which comes as no surprise, especially considering forecast that it could reach parity with the US dollar by year end. This scenario remains highly possible, as the European Central Bank is committed to continue lowering interest rates. Weak macroeconomic reports coming out of the euro area are only adding to pressure on the European currency. In particular, yesterday's data revealed that the Eurozone Consumer Confidence Index dropped to minus 13.7 in November, down from minus 12.5 a month ago. This decline underscores the growing need for the ECB to implement measures to stimulate economic growth. Thursday's data, along with comments from Bank of England policymakers, failed to provide support for sterling. Besides, the UK regulator is expected to hold off on further interest rate cuts, which could deepen economic challenges. Given this outlook, it is not surprising that the pound is actively losing value. Let's now turn to today's macroeconomic calendar. It features UK retail sales data for October, with a projected monthly decline of 0.3%. On an annual basis, retail sales are expected to decrease from 3.9% to 3.4%. Obviously, a drop in retail sales is likely to have a negative impact on the country's GDP, further intensifying the ongoing economic woes. The calendar also includes Germany's GDP data for the third quarter, which is estimated to show growth. In addition, traders may take notice of the German manufacturing services and composite PMIs for November, which are forecast to be disappointing. Weak data on business activity in the euro area, coupled with a counteraction in Germany's manufacturing sector, could trigger an increase in the volume of short euro positions. A potential decline during the first half of the day may prompt market participants to lock in profits, leading to a reversal. As a result, the euro could experience a significant rebound during the North American session. Britain is also set to release data on business activity, with the UK PMI figures expected to be relatively positive. These figures are slightly above the 50-point threshold, indicating modest expansion. Upbeat data could support the British pound. Regarding the United States, attention should be given to similar PMI data. Strong figures are likely to contribute to a brief rally in the greenback. Nevertheless, the market is expected to reverse as traders take profits, potentially allowing the euro to recover after its extended decline this week. Also, the University of Michigan will release its final readings on consumer confidence, inflation expectations, and current conditions for November. What is more, ECB board member Isabel Schnabel is scheduled to give a speech. As you can see, today's macroeconomic calendar is packed with key reports, all of which could significantly influence market sentiment. Now let's move on to the technical analysis and take a look at the 1-hour EUR USD chart. I expect the euro to dip below 1.0451, weighing down by weak euro area statistics. Only false breakout here could provide an opportunity to go long. Otherwise, the European currency is expected to extend losses to 1.0408. A false breakout at this level will trigger a buy signal, setting the stage for a bullish correction towards 1.0497. If the price rises to this mark during the European session, its false breakout will generate a sell signal, dragging the price down to 1.0451 and probably 0408. If the price breaks through 1.0487 and consolidates above this level, a bullish correction is likely to extend to 1.0542, 0575, and even 0607. At these two upper levels, I recommend going short on the rebound, targeting a 25-30 pip move. Short positions at 1.0542 and 0497 can only be considered on the false breakout. Speaking of the British pound, long positions can be opened in the event of a false breakout at 25.60 or 25.20. Going long on rebound will be relevant at 1.2495, anticipating an intraday correction of 35-40 pips. If bulls regain control of the 25.60 mark, the pound sterling is expected to advance to 26.06. If the price breaks through and consolidates about this level, the British currency will have a chance of extending strength to 1.2654 and even 27.10. At this mark, it would be wise to go short on the rebound, expecting a 35-40 pip move. Going short at 1.2654 and 26.04 will only be relevant amid a false breakout. Good luck to all. Have a nice weekend.